This is the beauty of Bitcoin. Someone trying to buy $30 worth of gold. Gold today is priced at $25.04, okay? If I wanted to buy a 1/10 of an ounce of gold, it would cost me far more than $2,500 divided by 10. It would probably be $2,500 divided by 10 plus 30%. So it's really interesting that Bitcoin affords the luxury of somebody buying $30 to be able to buy it at the same exact price as Michael Saylor. Find me a market that works like that. You will not find one, dude.
Bitcoin started 2024 on a strong note, surging over 40% year to date. This rally was driven by several positive developments, including the launch of spot Bitcoin exchange-traded funds in the United States and the halving event, which cut the reward for miners by 50%. Unlike previous cycles, Bitcoin reached new all-time highs before the halving, leading many analysts to predict a super cycle within this halving year. However, the outlook remains uncertain. More than 123 days have passed since the halving, and Bitcoin's price has yet to surpass its pre-halving all-time high. In the past month, Bitcoin has fallen by 13% and is down 14% over the last 30 days, sparking debate among market analysts about whether Bitcoin will rally in the fourth quarter of 2024. Amid this uncertainty, Gary Cardone, in an interview with podcaster Samuel Arms, expressed strong optimism about Bitcoin's future. Cardone noted that elite investors are making significant moves in the Bitcoin market and emphasized Bitcoin's unique nature, allowing purchases of any size at a consistent price, unlike traditional assets like gold. Before we continue with the rest of the video, do check out daily 5-minute crypto newsletter with all the latest crypto and Bitcoin news. It's a fantastic analysis of on-chain crypto data and breakdowns, and the best part is it's absolutely free. They'll cover expert predictions, breakdowns of on-chain crypto data, and any breaking news you need to know, all in a nutshell. Click the first link in the description and enter your email to join over 50,000 others in becoming a better crypto investor right now.
Should be setting up for something. It's got to get over 63 for it to move. It's either going to break down or it's going to bust up above 63. The lows keep, in my opinion, the lows keep coming in a little bit higher. So that's good. But I suspect that there are some very, very sophisticated players buying large volumes of Bitcoin through an algorithm. And whereas you probably have some other players who are selling into that market, but they're selling, okay, I want to sell 4 Bitcoin. I want to sell 1 Bitcoin. And they don't do it as methodically as the algorithms. It's my belief that Saylor shared his algorithm with a lot of people. And that's really smart of him because it creates a market where people, where the volume gets really, really well hidden by building a complex model that allows them to buy 1/10 of a Bitcoin at, a fraction of a penny. Anyway, it's just very methodical, whereas you could have some people like a guy like me. I'm not going to go build an algorithm and buy 10 Bitcoin.
Yeah.
Now, maybe it should. Okay. But these guys are buying 1,000. So these ETFs, the inflows are here. We're seeing very high quality players. Goldman stuck $500 million on their balance sheet. And gold's responding very well right now. Well, it was over the weekend and prior to the weekend. Let me just take a look at it here.
I didn't know Saylor used an algorithm, by the way. He has his own algorithm to buy.
Yeah. That's how you don't ever see him with his volume. He's buying like what? Why does he care? See, this is the beauty of Bitcoin. Someone trying to buy $30 worth of gold. Gold today is priced at $25.04, okay? If I wanted to buy a 1/10 of an ounce of gold, it would cost me far more than $2,500 divided by 10. It would probably be $2,500 divided by 10 plus 30%. So
where's the 30% come from?
Well, because think about a vat of gold that's been melted down. Is it easier to melt that down and stamp it with Switzerland 0.999 in 1,000 ounces or in 0.1 ounce? So the more you do manufacturing, gold has to be manufactured. Unlike Bitcoin, like 1/100th of a Bitcoin will cost you exactly the same amount as 1,000 Bitcoin, right? In other words, you're not getting a price advantage or disadvantage for buying really, really small pieces of it. Unlike gold, which requires heavier manufacturing for you to break that down into a little tiny piece, a sliver of gold that you might share in a a consumer event, $100, $50, $10. Imagine that, right? So it's really interesting that Bitcoin affords the luxury of somebody buying $30 to be able to buy it at the same exact price as Michael Saylor. Find me a market that works like that. You will not find one, dude. Not one in the world where you can buy. Go into a grocery store, go to Procter & Gamble and say, hey, I want to buy wholesale. I want to buy a wholesale. I want to buy one piece of bubble gum, and I want the wholesale price that you give to CVS. They're going to say, fuck off. Yeah. Now you can buy a whole container of it. Okay. So think about, is there any product in the world that you can buy 1/10 or 1,000 of them and it's all the same price?
Gary Cardone is a strong critic of price controls, likening them to ineffective policies similar to prohibition. He argues that human migration naturally gravitates toward regions with greater freedom and abundant resources, stressing that the real advantage comes from having more resources, not necessarily lower costs. Cardone also criticized oligopolies and subscription fees for stifling innovation, using Apple's new peer-to-peer payment feature as an example. He pointed to the growing trend of digital fiat currency transfers and expressed a clear preference for Bitcoin over traditional banking systems, which he finds cumbersome and outdated. Praising Bitcoin's user-friendliness and unique characteristics, Cardone is confident that a bullish trend for Bitcoin is on the horizon. He's excited about its future and even sees a temporary price decline as a positive, a chance for stronger investors to secure their positions. In his view, Bitcoin is set for significant growth due to its advantages over conventional financial systems. Let's return to the interview and watch more clips to gain further insights from Gary Cardone.
Price controls are about the worst thing you can do. It is just another form of prohibition. Prohibition has never worked in history, dude. Even the clamping down of slaves. People are going to migrate for their freedom, dude. This is the animals would do the same thing. They're going to migrate where the resources are richer, deeper, broader, and more available. And this is why I always say, hey, it's not really the price of your resources, it's how much you have. If you have more resources than other people, it doesn't really matter what it costs. As long as it's cheaper than everyone else's and in abundance. But this concept of price control stops all innovation. Where I'm trying to head with all this is whatever worked 4, 5, 6 years ago, it's not going to work in the future. Subscription payments at $48 forever, you can't cancel. That's fucking done. Oligopolies and monopolies charging way too much for shit. You see this little thing, dude, that Apple just did? Tap
where they
pay.
you can send money just by touching phone.
P2P, baby, P2P, okay? I don't care if it's not Bitcoin. In fact, awesome, it's not Bitcoin, it's fiat. I get to move trash all the time like it's a perfect digital product. I'm good to go. I've got the bank calling me going, hey, look, we don't want you to call us anymore for wires. Okay, we'll make it really easy for me. They send me this form. Dude, these people are dead. Okay, this is a top 15 bank in the United States. Dead. You cannot send me an instruction form that is this long. Literally going, okay, if you're going to do your wires, dude, you need all this. I'm like, I'm not doing all this stuff, dude. I can use Bitcoin. I don't need to go through you. It's clunky, messy. You can't, it's just, and what are they doing, right? What they're doing is they're literally trying to use all the infrastructure they have today to build for the future. And like, no, you can't do that. You have to build new. Like Elon did not build NASA's program and go, we're going to use your the non-reentry system. He rewrote the whole thing, right? Like you have to just look at this differently. I think it's very, very exciting. See, to me, this is more exciting than, what's the price of Bitcoin? I haven't even looked, quite frankly. It's 59, 58. I mean, I'm not going to talk about price every 12 minutes. It's just so boring to me. It's immature. Okay, actually, I will just say it. It's very immature. And it tells me that people are waiting for a really instant pop. I don't need instant gratification on this trade. I mean, quite frankly, I'd like to see the fucking thing go to 50,000. I'd like it to melt down and punk out all of these little whiners. And don't think that the big boys don't understand that the Bitcoin market is extremely weak. The internal native Bitcoin market is extremely weak. It's fragmented. It doesn't cooperate with each other and doesn't have any more money. I mean, I heard a funny story the other day at Bitcoin Nashville. He said, all these big whales go in, meet with Saylor and go, hey, can I borrow $5 million? And they all walk away going, dude, I thought you owned 10,000 Bitcoin. I thought you'd been in here since 2000. You notice people go, hey, how long have you been here? When was the first time you bought your Bitcoin? That's a bad question. Okay. I like asking the question because I want to hear the answer. If it's 300, my next question is, what's your average cost? 300. Well, you're a fucking idiot, dude. Because your average cost should have gone up every day for the last 10 years. Your average cost should be in the thousands now. You stopped buying Bitcoin, dude. Whoa. Wow. Okay. You got 100 Bitcoin. That's awesome, dude. But you could have bought so much more Bitcoin.
Building on Cardone's optimism about Bitcoin's imminent bullish trend, it's important to examine its trading patterns, particularly in the context of historical price behavior. Since reaching its all-time high of around $73,000 in March, Bitcoin has seen limited price volatility, dipping to a low of approximately $49,000 on August 5th, the same price as when the Bitcoin ETF launched in January. Despite this, Bitcoin has mostly traded within the $60,000 range, occasionally spiking to $70,000 before pulling back. This pattern is reminiscent of the 2020 cycle when Bitcoin hovered around $9,000 from June 2019 to September 2020, quickly rebounding after the COVID-19 crash that briefly dropped it to $4,000. A detailed analysis using a 12% price range, which allows for consistent comparisons across various price levels, revealed that during the 2020 cycle, Bitcoin spent 183 days in the $8,860 to $9,968 range. Currently, it has spent 133 days between $58,354 and $65,625. With 50 days remaining until October 9th, the start of the traditionally bullish fourth quarter, all eyes are on whether history will repeat itself. Bitcoin's current positioning within a familiar price range and market dynamics aligning with previous trends suggest the stage is set for a significant move. Cardone's optimism, backed by historical data, supports expectations of a bullish surge. Whether Bitcoin follows this expected path remains to be seen, but the convergence of these factors has the market poised for a potentially exciting end to 2024. As we wrap up, what are your thoughts on this interview? Please share your comments below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.